Hi there, welcome to my channel. If this is your first time stopping by my channel, please do me a big favor, like, share, and subscribe to my channel. I really would appreciate it. And so here's my dividend tracker. As you guys can see, currently we are in the green and the market is open. Earlier today we were in the red, but we're going back into the green today. And I have made some changes to my portfolio. I have finally sold off all of the single stock ETFs from Yieldmax. So I no longer own any of the single stock versions of the ETFs from Yieldmax. I switched over to the Roundhill single stock ETFs. I do still own Yieldmax. I still own Ulti and a few other Yieldmax ETFs that I still own. I also still continue to own some of the inverse versions of the Yieldmax ETFs. So I haven't completely gotten rid of all of my Yieldmax ETFs. Of course, none of this is financial advice. All of this is for entertainment purposes only. Because a lot of those Roundhill ETFs are leveraged to the upside and to the downside by 1.2%. And so I have my reasons for making a switch from Yieldmax single stock ETFs to the Roundhill ETFs. I believe that as long as the bull market continues, and tomorrow should be a good catalyst to the continuation of the bull market if rates are cut, which it's more likely that they're going to get cut than not. And so that should continue the bull market. And as you guys know, when you look into the description of the objective of the Roundhill ETFs, the objective is not only income, but it's also growth. And so you get the best of both, right? You get income and growth through the single stock ETFs from Roundhill. And so let me show you guys the dividends. Still making $5,700 on a monthly basis. So even though I am sold off a lot of those single stock Yieldmax ETFs and switched over to the Roundhill ETFs, it didn't really impact my income too much. Still making roughly about the same amount of income on a monthly basis, and maybe a little bit less on an annual basis, because I was at like 69, but now we're at 68,400 just about. But I'm still getting paid dividends. And so let me show you guys on my actual Robinhood portfolio. Let's switch over to here. Here's my actual Robinhood portfolio. And this number that you see here on the screen includes my cash, my money invested, and some margin that I'm using. And so if we switch over to this other side, this only shows my money, my cash. And so as you guys can see, yesterday I was close to about $250,000 yesterday. But I did mention that I needed to remove about $3,900. So I did take out about $3,900 because I need to pay a bill, a credit card bill. And that money came out of the buying power. It came out of margin. And so I'm going to use margin to pay off that credit card. And that's how I've been paying for all of my bills. And so earlier today, I decided to sell MSTY. I'm right here from Yieldmax. I sold it all earlier today. As you guys can see, here it is, MSTY market sell. It was $712.31. And so I sold it for a little bit of a loss, but I think the MSTW will be better for me. So if we look at MSTW, which is what I simply sold the Yieldmax version and immediately bought the Roundhill version of this ETF, which is right here. And so as you guys can see, I'm already at 727.06 I only bought $712.27, I believe, of this ETF. And it's already going up because I think I bought it for a fairly good price. And I think I'll see greater appreciation here with this ETF. Hopefully, we'll see. Also, another thing that I noticed is that this one, the one from Roundhill, is actually only 30% margin maintenance, while the Yieldmax version is 35%. So that's another benefit, I guess you could say, of owning the Roundhill version over the Yieldmax version. And so I invest my entire weekly income into my portfolio. Every week when I get paid, on average about $1,000 per week, I take that money and I either split it up into 10 different ETFs, which is basically $100 per ETF, or I split it half and half, 500 and 500, and I usually buy something that's high income. So that would be like in this case now, a Roundhill ETF, and something that has more growth potential. So I'm kind of mixing it up, splitting it in between income and growth. I want the income part of my portfolio to be a little bit smaller than the growth part of my portfolio, and so that's why I've even been buying some ETFs that pay dividends on a quarterly basis. For example, like this SPY-G. So if we look at SPY-G and the long-term performance of SPY-G, it has been doing very well, as you guys can see. This big dip here is the tariff crash back in April, and since then it's just taken off. And so I assume that this will continue to happen. This ETF will continue to grow, and that's one reason why I want to continue to buy more of this ETF here. And there are others that I'm personally buying that don't necessarily pay a monthly dividend, but have more growth potential, or have for example, less volatility. It goes down less on a down day. And so let me show you another one here that I was looking at. SPLV. See if I can find it right here. Let's just look at it right here. SPLV. Currently, I only own one share of this, but this is low volatility. So if we look back, here is the same April crash, the tariff crash. As you guys can see, this only crashed down by 3.10%. So it's, it didn't really crash that hard. Not like the S&P 500, which crashed over like about 10%, I think. So that's not too bad. So if you hold something like this that doesn't tend to crash as hard, doesn't mean it won't crash, but it just doesn't crash as hard. I think it adds a little bit more stability to my portfolio. And so I'm either going to buy like $500 worth of this Invesco S&P 500 low volatility ETF. This ETF does not pay a weekly dividend or a monthly dividend. This ETF pays a quarterly dividend, I believe. I may be wrong, but I think it only pays a quarterly dividend. But I'm okay with that because the reason to own something like this is because of the low volatility. So as you guys can see, I did receive a dividend in September, 28 cents. Or who knows, maybe this does pay on a monthly basis. There is a way to find out if this does pay on a monthly basis. We go over to here. This is Webull, by the way. I usually use Webull to look into dividend payments and comparing different ETFs. And so if we look at Webull here, if it'll open up, there it is. Well, yeah, I guess it does pay on a monthly basis. SPLV. So as you guys can see, it doesn't pay much. It's paying anywhere from 12 to 10 cents on a monthly basis. It's kind of an expensive ETF, $72.41 currently, but it's low volatility. And so the reason why I personally want to own something like this is just to bring more stability to my portfolio. Because if all I have is high income and nothing that brings stability to my portfolio, or nothing that brings growth, then that may cause more volatility and a greater amount of crash in a crash. And so with something like this, this should bring more stability and also cause my portfolio overall not to crash as hard. But of course, I need to own a larger amount of this. So that's the way I'm doing this. I'm kind of just splitting my money, 500 usually into high income and 500 into something that'll grow. So that's kind of what I'm doing. I'm looking for low volatility, stability, something that'll grow, and something that won't crash as hard. If you guys know about any other ETFs that have those characteristics, please let me know in the comments down below. I'd really appreciate it. And so probably what I'm going to be doing is I'm going to be buying the Roundhill version of Google, which is ticker symbol GOOW. This is a comparison of the Yieldmax version and the Roundhill version of these ETFs. The purple is the Roundhill, and the blue is the Yieldmax version of the Google ETF. So as you guys can see, the Roundhill one hasn't existed for that long, while the Yieldmax one has existed for a lot longer. So we have to go back to about a month when the Roundhill version of the Google ETF came out. And so as you guys can see, so far the Roundhill version is beating out the Yieldmax version in the past month. Okay, if we go into the past 3 months, yeah, okay, so still the Roundhill version is beating it out, even though it hasn't been around for the past 3 months. And so that's one of the reasons why I'm switching over to the Roundhill version of these ETFs instead of Yieldmax. Nothing against Yieldmax. It worked out for while I did own them, they were paying me. They never missed a payment, and they have a good total return. As you guys can see, GOOY from Yieldmax, the Google ETF, does have a positive total return here in the past month of 16.76%. So it's not bad. It's not a bad ETF, but seems that the Roundhill version is outperforming the Google version. So that's why I'm switching over to the Roundhill ETFs. It may work out, it may not work out, but I'm thinking it'll work out a lot better for me. I don't know, I may end up rebuying those Yieldmax ones again. Don't know, maybe not, I'm not sure. But the one I'm really waiting to buy is WPay from Roundhill. But unfortunately, it is still 100% margin maintenance, and that's why I have not purchased it yet. But as soon as that goes down, I'm going to look for an opportunity to start buying it. So tomorrow when I get paid, more than likely I'm going to buy some SPLV, that low volatility ETF that I showed you guys. And I'm probably going to buy GOOW, which is the Roundhill Google ETF. That's probably what I'm going to do. income and something low volatility with great growth potential. That's what I'm splitting my money into. Well, thanks so much for watching. You guys have a great day. God bless. If you guys got any comments, please leave them in the comments below. If you got any questions, I will answer your questions. Please leave them in the comments below. Please don't forget to like, share, and subscribe to my channel. I really would appreciate it. You guys be helping me out a lot if you did that. And I thank you so much for watching. God bless. Catch you in the next video. Bye.